Okay, everyone. Good evening. I'm ready to start the webinar. I'm just doing my final sound check, so I'm in. Good evening, everyone. Tonight, it gives me great pleasure in interviewing Simon Allen, who I've known for a little while in terms of, doing mortgages. I had a good conversation with Simon today, funny enough, about the future of mortgages and especially for property developers. So for those that are looking for finance and different types of mortgages, then tonight will be a really insightful interview. I think what was interesting from the conversations I had with Simon is the amount of paperwork that mortgage companies are looking for you to do, which gives you a bit more stress, I guess. But if you have someone by your side who knows what they're doing and making sure that you have the right paperwork in order in the first instance, then it makes the whole journey a lot more enjoyable. And I guess that's the thing that we're going to be working on with Simon this evening, is just to understand what changes are going to take place in the future. Now, as I record this, I'm just going to be putting this onto, as usual, onto the app. So you'll see this going onto the video. So you can download this on, well, you don't have to download it. If you've already got the app for clients, then you'll be able to rewatch this video at some point in the near future. And as well, we'll be putting this on the podcast as well. So for all you clients out there, you can access this at any point in the future. Now, if you wish to become a client or discuss our services, then you can do so by going on to www.optimizeaccountants.co.uk, and you can book a consultation with us. It's not tax advice, please note. It's just to talk about our services in general and how we can help you. If you hear something this evening which you like the look of, and it's to do with the anything that you hear from a tax perspective, then you can book a call as well, going on to the same website, www.optimizeaccountants.co.uk, where one of our 4 tax advisors will be happy to help you. So here's Simon Allen. Like I said, I'm going to give it an introduction now. I think one of the things I picked up when I was reading his material was giving a honest opinion. And I think one of the things that is aligned to our values, which is integrity and honesty. Sometimes we have to be honest with ourselves, but also honest with clients. And that really helps. And I've just noticed my video is not so, there we go. And that really helps because rather be, my microphone's now gone for a duck. I'd rather be honest with clients, because if they're doing something I don't think they should be doing, or indeed we believe that there's a better solution out there, then it's our job as accountants and tax advisors to tell you that. A lot of accountants will just do what you tell them to, and I think that's the same as some mortgage advisors. They need to give you pragmatic advice, and I think that's kind of the key thing through this. So, Simon, if you want to now unmute yourself, we can go ahead now and start the interview. One thing I would say, guys, if you're listening in, then make sure that you this is a Q&A. This is an interview, yes, but there is sections whereby I want you to chip in with your questions. So if you've got questions about mortgages or mortgage finance or anything like that, that you can try to, which Simon can, answer. I think we need to be mindful. Needs to be a general Q&A rather than your specific questions. But if you've got questions, then fire away. Don't leave this webinar thinking, I wished I had asked that question. It's too late after this interview, so make sure you do ask away. And just type into your chat box, and I will pick that and post it onto Simon Allen. So before we kind of start then, Simon, over to you. I mean, tell us what you do and how you help property investors.
Okay, thank you, Simon. Evening, everybody. I've been a landlord now about 17 years and have been involved in property finance for a lot longer than that. And I was always very frustrated that when people came to me sort of in a previous life, I had to introduce them to just one lender. And when I was arranging my own mortgages, I felt very frustrated with the process. So Searchlight Finance was set up 10 years ago, and at the beginning we did property finance, and we also did general business finance as well. Over the years, we have sort of changed direction, and now all we focus on is dealing with investors, developers, and landlords. So there's probably, depending on who you listen to, between about 13 and 16,000 brokers in this country.
Wow.
So that ranges from your financial advisor who will do a few mortgages a year, to people who are literally doing the big concerns who are doing hundreds and thousands a year. What I thought was sort of lacking in the market was a specific brokerage whereby the individuals behind it were landlords, understood all the issues, and then also for a couple of years I ran a national bridging company as well.
Right.
So when I'm looking at a case, when I'm dealing with a new client or an existing client, I have various hats on. There's my landlord hat on, which I'll come to later. There's the broking hat on, and then there's also the being in front of a lender and trying to persuade them to part with their money, which is sometimes the hardest part of the role. So all we do, as I said, is mortgages. We do any type of finance that an investor, developer, landlord requires. So it's your traditional buy-to-let, it's your specialist buy-to-let, as the market call it, which is limited company finance, HMO finance. I also get involved in refurbishment finance, traditional bridging, although it's now known as short-term finance by a lot of lenders, full-blown development finance, which may be a new build out of the ground, or it may be a commercial conversion, etc. And we do sort of portfolio finance, commercial, whether it's a shop, block of offices, etc. So that's what we do every day. A lot of people want to give up the day job and go into property. I don't want to give up my day job because I love it. I really enjoy what I do, and perversely I get as much pleasure in persuading somebody not to do something than I do in arranging a mortgage.
That's interesting. And you mentioned about limited companies, interesting enough. So this is a conversation that you had and I this afternoon, funny enough, talk about limited companies. And sure enough, there's our first question about them. So Callum's asked the question, which limited company buy-to-let lenders like each company structure for funding deposits? For example, some lenders don't like intercompany loans, and some don't like companies receiving dividends from other companies. So almost this is like a holding company structure, I think, more than anything else. But what's your experience of that kind of appetite from lenders?
I would say that if that question had been asked 2 years ago, I would have said the lenders would have been on a diet. The appetite was quite low. Not many lenders were in the market. It's always been the high street lender who's been interested in that kind of proposition. The traditional buy-to-let lenders were just really interested in simple, straightforward limited companies. Fast forward 2 years, I'll say there's a lot of lenders who are extremely hungry for that type of business. I do quite a lot whereby you'll have a limited company and the shareholders of that limited company are other shareholders.
Right.
And I do a lot where you have, say, typically an IT contractor who has a trading company, don't want to take the money out because it will cost them a fortune in dividend tax, etc., and then want to do an intercompany loan to a property SPV. So there's a very strong market for it now. Not all lenders will do it, I'll be quite honest. And there used to be quite a differential between the interest rates. When I say quite a differential, probably talking 0.25% to 0.5% more expensive. However, again, that differential has disappeared, and now some of the lenders that offer it are some of the lowest cost in the market.
So are we talking the difference here between in terms of rates, what kind of percentage rates do you see often? I guess it's difficult because each person's circumstances is very different, which you and I will know. But if you had one person that had the same kind of financial situation, what kind of more of a percentage rate would someone pay in a limited company versus just buying a house with a buy-to-let mortgage in their own name?
My wife calls me a politician because I never give her a direct answer.
Okay.
What I'd say with this is that rate isn't as important. Sorry, it is important, but other things like the legal process is important.
Sure.
It's a waste of time being offered a low rate if that lender will take 3 months to get an offer out, because
Yes.
you'll be frustrated. You'll probably have a hairstyle similar to mine by the end of it. So if I give you an example of a case that I did this morning, and that is let me get this right, it's a limited company. The shareholders are two other limited companies.
Yep.
And the owners of those limited companies are two couples.
Right.
Now, the interest rate on that, they want a 5-year fixed, and they've gone for a 3.44% with a 2% lender fee.
Right.
The best rate in the market today is 3.69%, but with no fee. That lender is extremely slow, doesn't like the structure that we're discussing, so they're out.
Okay.
But when you're looking at a purchase, this is probably the best option in the marketplace, because for a single let, that lender will allow your own solicitors, as long as they're big enough, to act for both parties, which significantly reduces the costs.
Okay. Okay. No, it's good to know. I think, like I say, it does really, it does vary, and you're right. It's quite difficult to provide rate. But I would, in the past, I used to say it was a lot more expensive, but I don't think it is as expensive comparing a limited company to your personal name as it was maybe 3, 4, even 5 years ago.
No, the gap is reducing all the time, and lenders don't like me saying this. I regularly get told off by them, but there's too many lenders. And more lenders came into the market last year. There's more that have come into the market this year. There's more on the horizon. So with some lenders, there's a lot of competition, and that can only help the people that are listening tonight, because it affects interest rates and also it affects criteria as well.
Right.
Typical example, DSS tenants. Not everybody likes them, but some people make very good livings out of that structure. And over the last 12 months, 2 or 3 lenders who didn't used to do it have now gone into that market.
Gotcha.
So that's with the increased competition that's out there, which can just be good for everybody, really.
Okay. Let's take it back right now in terms of looking at your history. It's always interesting, I think, in terms of why people do things and why they started out in the first place. Why and when did you start in your mortgage business?
The when's reasonably straightforward. 2009. Why? A client in a previous life threatened to kill me.
Wow. Okay, that's a story.
Yes, I was a director of a national bridging company. I was the operations director. And one day, a client who wasn't particularly happy that we declined a loan,
right,
rang me up and seriously threatened to kill me. So I decided that maybe a career change was due. And at the same time, the credit crunch came along.
Yeah.
So I decided that I would leave the bridging company and set up, which I thought was easier said than done. So I set up in January 2009.
Good year.
After spending a couple of months dealing with some houses that I had, we did a couple of refurbishments,
right,
which was enjoyable. Set the business up, lots of clients, lots of opportunities, spoke to all the lenders, yes, we'll do it, and nobody had any intention of lending at all. They were all shut in 2009.
Yeah.
So gradually built it up, lived off credit cards, sold everything that we had.
Wow.
My wife even got a job as a part-time cleaner, which I helped her with at weekends in a local school. So gradually the client bank was built up. Lenders then started coming back into the market. And if there is a positive thing from the credit crunch, it's the new lenders that have come into the market over the last 9-10 years who've got a real strong appetite for dealing with investors and landlords.
Yep.
I don't think that was there beforehand.
Okay.
So say we've been going now 10 years next January, and thoroughly enjoy it.
Good. And that sounds like a journey and a half for you to go through all of that. I mean, what was you going through personally when you had to fight digging to build up your business? And, that wasn't in your control. Was it some of the things that you just spoke about, banks not wanting to lend, and then having to dig your heels in and carry forward? How was that for you at that time, and your wife, in fact?
Yeah, I mean, it was very frustrating. 2 young children, didn't really understand what was going on. But I had belief in myself. I understood property. I was already a landlord at that stage and had been through cycles before, knew that things would get better. So set myself up to talk to the lenders that were shut to say to them, look, when you're open, can I get on your panel, please?
Gotcha.
And as a result of that, when things did start improving, I had a very, very strong panel and had sort of kept abreast with what was happening in the market. So we were raring to go then. And every year since has been better than the previous year. Good.
Wow, that's fantastic. And it's really nice to hear the kind of, I know just about to say, what major challenges have you faced? I think we've just heard them. But I think in terms of what's your key learning point from all the challenges that you've had? What was the kind of key thing that you learned from and go, okay, that's really helped me even in my growth stage as a business?
Well, the bridging company, we dealt with a lot of people, which included clients, introducers, solicitors, accountants, who maybe sometimes were economical with the truth.
Right.
So you had to get that information from them, to try and find out, if there was a deal in there, and if it was something that you were happy with. And sort of over the last 9-10 years, I've seen a lot of people ring up, come to see me, who try and hide things.
Right.
Because they feel that if the information is passed on the way it should be, then nobody can help them. And that's probably quite true in a lot of circumstances, but I'm a great believer in telling the truth. If a lender messes up, I'm human. If I mess up, to tell the truth, and I feel that you are respected more by doing that.
Yes.
Certainly with the lenders that I deal with, some of those lenders only deal with sort of larger businesses. So for a one advisor business, which I am, it's quite rare to be sort of on their panel. And I'm on there because they know that what I say is the truth.
Yeah.
And when I put something to them, it's been researched, the alternatives have been looked at, etc. So I've almost done their job for them. So to me, it's been open, it's been transparent, and to be honest.
Yeah, and that's interesting. I mean, we spoke about this earlier, didn't we? In terms of being, the value of truth and integrity, I think goes a long way. And I think you're right, as you said earlier. It's one of those things that you've got to adhere to those things all the time. You can't let it slip, unlike some professionals, which we won't go into detail on this as we did earlier, but it's good to see that we can have faith and belief in what you say and do. So that's really good to know from that side of things. In terms of your proudest achievements, obviously we talked about your challenges, but what are your own personal achievements? And let's talk about it from personal perspective or in business since you started.
Personally, I would say it's doing a degree, which might seem reasonably straightforward to a lot of people. When I was younger, I came from quite a poor family.
Right.
My dad had, I think, at the peak, about 3 jobs. I hardly ever saw him, unfortunately. And they couldn't afford to put me through university. So I went straight into employment. I understood at the time. Went straight into employment, but over the years, I always thought to myself, could I have done a degree? So I thought I'd make it easy for myself. Got married, had 2 young children, and then did a degree, surprisingly, in financial services. And I passed that, got a good degree out of it. So I've always been sort of very proud of that personally.
Good.
On the business side, I've touched on it a couple of times already, is my panel of lenders.
Yeah.
I would say that I'm in the top probably 1% of brokers in the country. And when I say panel of lenders, it's lenders that I've got direct access to.
Yeah.
Quite often a broker can only access a lender through a third party.
Mm.
That third party will also charge the client as well. So there's multiple fees involved. The process takes a lot longer. The client's talking to one broker who's then talking to another broker. And the worst I ever saw, there was 4 brokers in the chain.
Wow. So the fees must have been high then as well.
Yeah, exactly. So that kind of thing doesn't help anybody. So with the lenders that I deal with, I deal directly with them. And quite a lot of them as well, I'll deal with sort of main board directors, senior managers as well. So if we do have a problematical case which you think doesn't meet their criteria, but there is enough merits in it, then I'll talk to them, and on a success rate, we're pretty good at it.
Good. Now, before I go on to the next question, guys, for you listening in, I've not seen too many questions. I saw a couple of comments and so on, but I haven't seen any direct questions yet. So make sure you get on your keyboards and start to ask those questions. No question is too silly, too small. I'm sure we can address those questions together. Now it's 2018, and obviously we're halfway through 2018 already. Would you believe it? What challenges or risks do you expect to see yourself, and how can you, and I know obviously meaning challenges, risks to property investors, property developers, and how can you help them?
I don't think there's any new challenges this year, possibly with the exception of the EPC regulations that have came in last month. Do
you want to tell us about that? Because some people, it's fantastic you got all this knowledge, but for some people may not even know what the EPC.
Yeah, from May this year, lenders are now looking at the EPC grade of every property. And that's not just the one that's subject to the mortgage application, the purchase of the remortgage, it's your whole portfolio.
Yeah.
And some lenders will just focus on the one that's been mortgaged, but they're a minority. Say the rest will look at your portfolio, and any EPC that is an F or a G, when you change your tenant, if you own it already, you cannot rent it out.
Wow.
It has to be A to E. So you might have a long-standing tenant in there who's been there 10 years, didn't want any improvements, etc. The EPC is an F, no problem with voids, anything like that. However, the lender will discount any rental income that you get from that until you improve it. Wow. Most of what I've seen, and Callum's question has gone, so hopefully it will come back up again, it's really from the PRA changes from last year and 2016.
Yep.
So we've had Section 24, we've had the increased stamp duty. The PRA changes are causing real issues with the lenders. Again, they won't admit to this, but the amount of paperwork, the amount of research, the additional work that they've got to do, they've had to put new systems in, they've had to train staff, and some of them are much better than others.
Right.
So that's really impacting on service levels. Sometimes it could take, with a lender, 4 weeks to actually look at a piece of documentation.
Wow.
Where with another lender, it could just be 2 days. So to me, that's the biggest issue, is understanding what the lenders require, because the information varies considerably.
Yeah. How
they review your portfolio, because again, it's different. Some want an LTV across your portfolio of no more than 75%. Some want 70%, some are at 80%, some are at 65%. So you can see how varied it is. And then there's other lenders who will stress test your whole portfolio. Others will just look at the property that you're putting up. But as I touched on before, it's not just about interest rate, it's about service levels. A low interest rate is nothing if your purchase falls through.
Yeah, I think one of the questions was saying, how are you seeing PRA portfolio landlords affecting new borrowing in terms of difficulty and delay in getting mortgages in a limited company?
I would I would say that lenders now I would put into three categories. You have the traditional buy-to-let, which if you've got a portfolio of the last few years, you will have mortgages with them. So I'm talking the Mortgage Works, Birmingham Midshires, NatWest, Barclays, etc. A lot of those are only interested in portfolio landlords up to 10, if you own 10 properties.
Yeah.
Some of them aren't interested at all. Birmingham Midshires, for example, will not deal with portfolio landlords.
Wow.
And then you have others that will lend to you if you have more than 10.
Okay.
So it's sort of been split into three. I mean, I've got clients who've got hundreds of properties. They can still find lenders, but they may be slightly more expensive rates that you see in the Sunday papers, because they tend to be sort of aimed at somebody who's in employment and one or two buy-to-let properties.
Okay.
Information they're getting better at. There's software where you can put your portfolio in, which lots of lenders will access, which is very positive.
Okay.
Lenders will also use that portfolio to get market values on the properties that are within there. They'll check your mortgages, they'll check your market rent, etc. So I help my clients because I know what the lenders are looking for or what they're not looking for. So that reduces the paperwork that's needed. So it makes it a lot smoother for everybody.
Fantastic. Thank you for that. I think another question's just come up, whether it's okay, so I'm new in property investing, but wish to know how I can refinance the flats that I just bought in January through Right to Buy. My current residential mortgage on the flat rate is fixed for 2 years. So my question is, do I have to wait for the 2 years to expire before I can refinance, or are there other options, as this is holding me back to start my property investment journey? Any advice would be greatly appreciated.
I'll be quite honest, I don't know the answer to that. Right to Buy isn't something that I really get involved in because it's a personal product.
Yeah.
However, I'm sure my details will be shared later on. If you wanted to email me, then I can find that out for you.
Great.
But normally with Right to Buy, there's restrictions from the council of what you can and what you can't do. Certainly I've got clients who've had Right to Buy properties that have subsequently remortgaged, but timescales I don't know. So send it to me, I'll find out for you.
Well, I'll certainly be sharing your details in an email anyway, Simon, so people can access you as they feel. So that's absolutely fine. And in terms of, let's look at the flip side. Always careful of not being too negative with my presentations, but sometimes we have to be truthful and honest about the situation. But what are the opportunities, and how can you help property investors seize these?
I think people who want to get into property long term, I think there's a lot of opportunities out there. And even if you're not particularly interested in being a landlord, but are looking at sort of buying to refurbish and sell, again, I think there's opportunities. There's more lenders now than there ever has been. They are really hungry to go back to appetite. They have money to lend. They are interested in new business. There's a desire out there, which to me, I think is all very, very positive. With Section 24, people are looking at how to increase yields. Some people are going into what I would call semi-commercial. So that's a retail shop on the ground floor and a flat above. So you'll have two tenants. A lot of lenders are a little bit wary of that, certainly for a first timer. So you do need some buy-to-let experience for that. But the yields are important. So the yields are higher, but if the yields are higher, it means the risk is higher as well. So I think that's a strategy if you've got a decent portfolio already. For somebody who's starting off or just has 2 or 3 properties, then HMOs, if they're in the right area, is still very, very popular. And whether that's a HMO to a student or to unconnected parties, I'm seeing a lot of people buying houses that are split into flats. So it might be like a Victorian house that has been split into 4 or 5 flats, or even a traditional, I've seen a few of these recently, end terrace, quite substantial property that's split into 2 flats. So you've got a higher return, but you've got less hassle than operating a full-blown HMO.
Right.
I also think as well, holiday lets in the right area is certainly something that a lot of people could look at, because the Section 24 doesn't affect that at all.
Right.
We've already spoken about limited company finance, and to me, a strategy which most people don't talk about, because everybody's into sort of not necessarily the new fad, but just traditional single lets.
Yeah.
A lot of people forget about that, but you've got one lot of management, whether you do it yourself or through a letting agency, etc. Rates of interest tend to be lower. There's a lot of products in the market for it, and if your tax situation means that you go through a limited company, there's lots of lenders who are quite happy to lend to you, even if you're a first-time buyer and first-time landlord. Certainly, one thing that I personally enjoy is refurbishments, adding value to something.
Yeah.
Speaking to somebody this afternoon who's got a house which is already split into 2 flats, and they've got planning permission now to go into the loft to create a 3rd flat. It's going to cost them about 60,000 to do it. It will increase the value by about £170,000.
Wow.
Just to do that. So he'll do the work, and then once he's done it, he'll remortgage it. And then development finance is also becoming more popular, and that could be a conversion under permitted development, or it could be a full-blown building of a house, 2 houses, 3 houses, whatever it may be. I think if you go along sort of the curve of the number of lenders that are out in the market and the experience that they want to see, I would say start off in single lets, move into HMOs or flats on one title. If you're doing refurbishment, start on the light refurbishment, new kitchen, bathroom, windows, etc. Then go into something a little bit stronger, moving walls around, extensions, loft conversions, etc., and then work your way across, so the lenders can see that you've got an experience. But more importantly, I've been doing this a long time, and I probably still learn out of every mortgage that I deal with. So you learn from your experiences, and to go straight into something without having that prior experience can put some lenders off.
Yeah, and to be fair, you sound like you just described my exact property investment journey. I started out as a single let property investor, and they were dead easy. And then we got a little bit more excited about HMOs. We didn't like HMOs because they were so time intensive, but we decided to go into micro flats under 1 freehold. So we take one development and then carve that up into flats, which was a nice, easy project, but it also added so much value to it as well, into the main building, which is fantastic. Someone also touched upon something very interesting, which is, a shop below a flat. One thing to note on that is the stamp duty land tax is on non-residential rates, so a lot cheaper to buy those type of properties from a stamp duty land tax aspect. So, yeah, very interesting side of things. And commercial buildings, let's not forget, also are not subject to Section 24. So some really good points on that one, Simon. So thank you for sharing that with us. In terms of, one thing I was going to say on this is, what is your offer for the guys listening into us? Have you got anything? Before you do say anything, one thing the reason why I'm talking with Simon this evening and sharing our webinar with you this evening, guys, is because we respect Simon in terms of his offering, his approach, and his values. That is more important to us than us receiving commissions or kickbacks. So whenever we're saying speak to Simon is because we know you're going to get great value. We're going to get great service. We don't expect, we all want that commission or kickbacks, because if we're going to offer you to someone else, you're going to get great service. And hopefully you'll say, hey guys, optimize, refer me to this guy and he's done a really good job for me. So Simon, over to you. What is your offer for the guys listening in tonight?
Well, as the country at the moment is in a very good mood because of the football,
yeah,
then two offers really. One is my suite of documents for portfolio landlords, which includes a business plan, an asset liability profile, a cash flow forecast, a schedule of properties, and an income and expenditure, along with sort of an overview of what lenders are looking for, the criteria, etc. And then secondly, because I say football is good at the moment, which I enjoy, if any of the listeners proceed to a mortgage application, I do charge a fee, which is £495 for the first one. As the mortgages increase, then so the number that you do with me, that does change. So for the first three people who come to me and quote that they heard me on this webinar, then I will waive that fee.
Great.
And if any of my clients are listening to this, then I will sort you out as well, so don't worry.
It's nice to know that you got that one in the bag as well, Simon. Thank you very much for that. Now you can put yourself on mute. Thank you ever so much for joining me this evening, Simon. I hope you guys got some things out of that. In fact, I did see two questions. I was just going to see if there's anything I can post to you, Simon, before you do go. Actually, before you do go, there's a couple of things I hope that you can see.
Yeah, okay.
Callum just asked the question, how many limited company lenders accept borrowers with no or low income? For example, contractors who retain almost everything in their limited company.
I would say that between 30 to 40% of them will be happy.
Right.
Because with your example, and I'm specifically talking about you here, you are making money but choosing not to take it out.
Yeah.
So as lenders work off tax year calculations, previously known as the SA 302, there'll be very little income on there.
Yeah.
So what I would do in those circumstances, and I've done many like it, is just get hold of your accounts and show to the lender that what you could have taken out. I've recently arranged a mortgage for a lady who had a portfolio of 6 properties, had no income on her tax returns at all, because she had losses built up from previous refurbishments and was a part-time interpreter for the police. And she was on £3,000 a year, and we got her a mortgage, no problem at all. So it can be done.
Good. And Neil's asked me a question, or I think he's asking you a question about buy-to-lets and 21% below market value, which, as I mentioned, so thank you again for that, Simon. What I will do is you can see Simon's details. You can take a screenshot of that. But what I'm going to do more importantly is share Simon's details on an email. So you'll have access to Simon's email, website, and telephone number. And what I would always say to you is have a conversation with Simon, find out what he's got to offer you. Make sure that you don't, and I don't mean this in a nasty way, but make sure you've got something to talk about. So if you've got a property deal, then make sure you've got a deal that you have got lined up and ready to go so that Simon can legitimately ask you, rather than asking any theory questions. We're all busy people, so let's make sure we keep it to real questions, if you don't mind, just to protect his interests. Again, don't forget, as we close off this webinar, that you can book to talk about our services on optimizeaccountants.co.uk. And indeed, if you've kind of got book your 30-minute tax calls, then feel free to do so. So you can book 30, 45 or 60-minute tax calls on our website again. And that is for more specific questions to your situation, and we'll make sure we'll provide you with a bespoke answer. And don't forget, again, we will be recording this, even though I've had a few technological issues. Unfortunately, I'm running Macs, and they don't seem to like Zoom very much, so I'm going to have to change, obviously, provider. So I will hopefully get something out of this system tonight, and it will be recorded. So anyone of our clients that have got the app, make sure that you re-watch this on your video panel, or indeed listen to it on the podcast in a couple of weeks. Anyone listening in, we do have a Facebook page called Optimize Accountants, and I think I've called it Optimize Property Accountants. So you can find us. We will be posting all our events on there. We also post any tax changes that's going on. We even put our spreadsheets on there as well. So if you're looking for support and advice, don't forget we do have a page. This is an open group for everyone. And that's on a Facebook page, Optimize Accountants. And we'll be posting our next events all on there as well. All it leaves me to say now is good evening. Thank you ever so much for attending tonight's webinar. I will be sending you an email tomorrow, so with Simon's details. I'll also be sending you links to this page, just to make sure that you can like it for me. That would be extremely appreciative of that. But otherwise, thank you ever so much for joining us this evening, and have a fantastic week. Good evening, guys.